Welcome to the final economic update for 2016. It's my pleasure to be here with Will Hickson from Morgans Financial, who's prepared this update together with Will Douglas. Will, it's been an incredible few months since the last economic update, with the big news clearly the US presidential election. So on Donald Trump's victory, we were quick to identify the initial surprise and market sell-off as an overreaction. And I know Will Douglas talks about this at length in the economic update, but would you mind just summarising your views?
Yeah, absolutely, Justin. So it's certainly our view that the market's initial sell-off was an overreaction. On the day of his victory, the Australian market was down over 3%. And we wanted to get on the phone, let clients know that was an overreaction. So we had organised a conference call. And look, an overreaction is exactly what that was. Since then, markets have been broadly positive. It's not for us to comment on Donald Trump or his social policies. However, his proposed economic policies actually look quite sound to us and certainly even quite stimulatory for the US economy and therefore the global economy.
I guess we'll have to wait and see. So since the last economic update, you spoke about interest rates possibly rising in the US in September by 0.25%. What effect would this have on our markets?
Yeah, so Justin, we had thought an interest rate rise in September was more likely than not, and we were concerned about some potential volatility stemming from a move there. Look, it ended up taking until December, but that rise did come through. So many of the outcomes, but I have to say many of the outcomes we thought that would eventuate as a result of that rise did happen through the quarter. So we had been avoiding some of the great beneficiaries of lower interest rates, like infrastructure and utilities businesses, and they had quite an awful quarter. On the flip side, many of our clients own QBE, which has a lot of leverage to rising interest rates and has been a recent outperformer.
So, Will, with Trump as president, what are our expectations for US growth in their economy?
Well, Justin, Will Douglas goes into this in more detail, but look, we think things look quite buoyant for the US economy. Unemployment is falling and growth rates look reasonable. And look, if the US is going well, that all bodes quite well for Australia. Maybe not today or tomorrow, but I think out to sort of 2018 we could see some better signs.
Whilst we're on Australia, let's touch on that. What are your thoughts on what's happening in Australia?
Yep, so Justin, we're not expecting any great fireworks at this stage here of the Australian economy. Unemployment we think is probably still a bit too high and growth expectations quite muted. So all in all, we think things will sort of tick along. Property prices is something we're keeping an eye on, particularly in Sydney. But we do think that there could be even another 2 interest rate drops in 2017, and that would certainly provide some further support to the economy. We're also starting to see some life from commodity markets for the first time in a long time. So November saw some of the most incredible lifts for coal and iron ore prices, and oil prices have risen too. So look, if that continues, that's going to be great for our economy. However, if that strength continues over in the US economy that we've been seeing of late, I think that's really where we're going to see some growth surprises in Australia as US businesses start to invest back in our country following some fairly good times over there.
Absolutely. So, Will, conversely, does this mean that we should be making changes to our current investment strategies for clients and how they're invested?
Yeah, Justin, look, for the last 4 years or so, it really feels like things have been going one way, with similar sectors outperforming. Those sectors being infrastructure, utilities, telecommunications, healthcare, and property. And at the same time, the same sort of sectors have been going, backwards. So resources, energy, and sort of cyclical industrial businesses broadly. So we'll go into this in more detail in the update, but we think there's a bit of a changing of the guard going on. So look, we're looking at a general shift away from some of the outperformers of the past. And towards some exposure in resources and energy, which have underperformed now for many years. So both resources and energy markets have seen something of a tightening of supply. Will goes into this in a lot more detail in the update. Look, that shift won't be for all clients across the board, but it's certainly something that we're going to be discussing on an individual by individual basis.
Thanks, Will. And I guess one further thing for clients to note is in this update, it contains a really good educational piece on fixed interest And in particular, Will looks at government bonds, and government bonds have been a class of investment that we've been generally pretty cautious on. So I'd suggest clients watch this piece just to improve their knowledge and understanding in this area.
Yeah.
We'd like to wish clients a Merry Christmas and a Happy New Year, and we look forward to talking to you again in 2017.